Hello, and thank you for tuning in to the Home and Finance Show. I'm Janis Bradley, broker-owner of JB Real Estate Consultants, and joining me is my co-host,
Diana Rice-Wilkerson, lender with Fairway Independent Mortgage.
We are your seasoned, trusted advisors committed to personally navigating you through the home buying and home lending process. This show is designed to provide you with the current and relevant information about different aspects of home buying, home selling, and lending so that you're knowledgeable when making decisions for you and your family. You can also hear us on Saturdays on Radio 1, 1310, 92.7, and 95.1 FM. That said, if you are in the market to buy, build, or refinance, we'd love to represent you. You may contact us at the information below. And now, on with the show. Hello, Diana Rice-Wilkerson. Shelley Gutzman, how are you?
I'm doing great. Thank you so much for having me here with you today.
Fantastic.
Absolutely.
We are going to have
wonderful.
a great show. We're going to have someone named Diana Rice-Wilkerson who shows you the money.
That is my job.
She shows you the money, so she's going to talk about some interesting information. And I think it's going to be about
Down payment assistance.
oh man,
Down payment assistance.
So many people don't realize down payment assistance is here. Always
Alive
been here.
and well.
Okay.
Absolutely. So we're going to talk about down payment assistance today, ladies. And today we're going to go deep. There's this saying, I tell Janis all the time, we hear it said, hey, we're not going to get into the weeds. Well, let me tell you, the answers are in the weeds. So we're getting ready to get into the weeds of down
I
payment
really
assistance.
thought she made it up, but I'm right in the weeds with her.
Yes, absolutely. And the reason we want to talk about down payment assistance, you guys know that 30% of the loans that get denied every year could be helped if the borrower had used down payment assistance. Some people, the biggest hurdle, I should say, or the biggest barrier to home ownership is the money, just for the down payment and the closing costs. So we want to clear up some confusion, and possibly at the end of this show, you may still have questions, but you'll be hopefully a little bit more informed than you were when you started the process. So ladies, let's just get right down into the weeds, okay? Number one, what I want to say about down payment assistance to start, and I want your questions as well, is there is no one size fits all. So many times first-time homebuyers, who are the ones that are typically asking about down payment assistance, they are looking for a specific program. And in their mind, they're thinking there's one program for first-time homebuyers. When in fact, most lenders offer maybe their variety of a program, or they might offer a state program, or they may offer a national program. When I say their variety of a program, some banks actually design their own program. And so that program is designed to meet that bank's needs. So saying that to say there is no one size fits all. So when you start in this process of buying a home, one of the questions that you really want to ask the lender is, tell me about your down payment assistance programs. And that way the lender then is explaining to you what your options are. So that is very, very, very important to know. The other thing is down payment assistance can come in the form of a grant, okay, where you don't pay the money back. It may come in the form of a loan, where you may have a payment or you may not have a payment. Or sometimes it comes in the form of a feature of the loan. So for example, we use the term down payment assistance, so we know that that means assistance with down payment. But in certain cases, the down payment assistance program a lender offers is 100% financing, meaning the borrower doesn't need any down payment assistance.
Oh, great.
So essentially, that down payment assistance that lender may be offering is coming in the form of a feature, in that they are willing to lend 100% of the purchase price and not require a down payment.
Exactly.
Does that make sense?
It does. It does.
Also, when it comes to down payment assistance with first-time home buyers, it's important to know that there are requirements to qualify for down payment assistance. It's not like just being a first-time home buyer entitles you to assistance. So some of the requirements might be around credit score, for example. The others might be around debt ratio. Sometimes it's a first-time home buyer, okay? Sometimes, well, some down payment assistance programs don't require that you be a first-time home buyer. Sometimes it's property location. Some lenders are trying to get their monies, especially banks, they may be trying to get their assistance into certain communities, into certain neighborhoods, or with certain borrowers depending on their income. So that assistance is kind of earmarked for those different groups. So again, there are a lot of pieces and parts that go to down payment assistance. Again, one size does not fit all.
So real quickly, Diana, when you're meeting with a customer, is one of the first things that come out of their mouth is that, can you help me with down payment assistance?
Typically.
Okay.
Or a first-time homebuyer program.
Okay.
Okay, so, but that's what that means, right? Diana, do you offer any first-time homebuyer programs? It's like, do you have any assistance? So absolutely, because that is the largest barrier.
Okay.
Keep in mind, credit scores oftentimes can be fixed. If a credit score is low, if a borrower takes certain action, that score can be increased. It might be 30 or 60 days, but it can take a minute to save $5,000, $10,000, $15,000.
Of course.
And so that is something that cannot be fixed. And oftentimes we think of maybe you can get, these are standard questions in the mortgage process. Can you get a gift from a family member? Well, in most cases, no, you can't get that kind of a gift from a family member. And so that's where the assistance really does become important and makes what's impossible possible.
I see. Could you, and this may be one of the questions that you commonly get asked too, is, am I a first-time home buyer? Or what is the definition of that? If I bought my home 20 years ago, or if I bought a home with my former spouse and now it's just me, does it have a definition at all?
Shelley, that is such an excellent question. Like down payment assistance, it too has multiple definitions.
Oh, great.
Okay, so a first-time home buyer, now our logical minds tell us if we owned a home before, right, maybe 2020 to 2005, if you're asked, are you a first-time home buyer, the answer may be no. Because it's like, I know I owned a home 15, 20 years ago.
Right.
Many first-time home buyer programs, but not all, many define first-time home buyer as someone who has not owned and occupied a home as their primary residence in the last 3 years.
Oh, wow.
Okay, so if you owned a home, there are people who inherited a house.
Right.
They've never lived in the home.
Okay.
They may have rented out the home, okay? They are first-time home buyers because while they own the home, they never occupied it as their primary residence, or they haven't occupied it as their primary residence in the past 3 years.
So the ownership is because of the deed part.
The ownership is part of it is because of the deed part. On the other hand, if they moved into the house, okay, and they have lived in the house and owned the house over the past 3 years, they are no longer a first-time buyer.
Okay.
Okay? So once again, even us as lenders, we have to ask the question differently. We can't ask and really get to who we're trying to serve, are you a first-time home buyer? Because you may get the answer no.
Right.
Because I'm still thinking about 2000 to 2005.
Right.
Right?
That I owned
You
a
have
home.
to say, have you owned and occupied a home in the last 3 years as your primary residence?
Okay.
And if the person says no, like I had a customer the other day, he said, I sold my house in 2019, okay? So he's been renting ever since, so he's a first-time home buyer. Very happy to get those benefits.
What about if you had a previous home with a spouse and now you're single? Would that still count if it was in the last 3 years?
If you owned and occupied.
Okay.
So if you owned, because there are situations like this where the names are still on the deed. Like, okay, I moved out, okay, but the deed is still in my name.
Correct.
Maybe there's some arrangement to sell the house in the future, and I'm gonna get money, but I have not occupied it as my primary residence in the past 3 years. Then you're considered a first-time home buyer for many programs. But again, that's a question, and it's so much on the borrower today. You've got to be as informed as the lender today,
right,
because otherwise you may not get the right answer. So, the question is, for this lender's particular first-time homebuyer program, how are they defining first-time home buyers? I mean, that's such a great question. Okay, so how are you, Diana, defining a first-time home buyer? Well, the other thing is lenders may have multiple programs, right? So they may have a program that defines it the way we just talked. There may be a program where it's like, if your name is on a deed, anybody's deed right now, you are not a first-time home buyer. That's exactly right. So why is this important to know? Because you may not qualify for one type of first-time homebuyer program, but you may qualify for another. So you don't want to be told no and think no means across the board no. If you're working with a lender that has limited first-time homebuyer programs where there's only one definition and they tell you no, you might be wise to call another lender and ask. And that would be Fairway, and that would be Diana.
So,
that's great
let me ask you
information.
this. Do you have to show the need to be able to qualify for down payment assistance?
Such another great question. You do not, okay? I know of no first-time homebuyer program where you have to show need. Typically, it's in the area of credit score, debt ratio, property ownership, that sort of thing. So what does that mean? That means that if you have $30,000, $40,000 in the bank, $15,000, $20,000, maybe money in 401k, you want to put that on your application, even though you're applying also or want first, down payment assistance. Because that can actually help you in this way. The underwriter can see, the automated underwriter and the actual underwriter can see you've got money to fall back on should you hit a financial crisis. So you don't need to present yourself as a person who is in need of this money that way. So some people do hold back on their assets because they think it's a need program, but it's not.
So what about what we call low to moderate income? Is that, like, I know we ask about qualifying, but what about the income part?
Such a great question. We could have 2 or 3 shows on down payment assistance.
Okay.
Typically, many down payment assistance programs offered by banks, I'm going to start that way. Many down payment assistance programs offered by banks, you might find that they have an income limit. It's normally 80% of area median income. It might be a little bit more than 80%. What does that mean? That means somewhere around $75,000 to $77,000 in general.
Yeah,
yes,
I think so.
today.
Okay.
Unless you're buying in a low income census tract or a moderate income census tract. So what does that mean? Once again, if you're buying in a census tract where you tend to have more low to moderate income buyers, then sometimes those guidelines can be waived. Why is that? Because banks are trying to get investment in those communities. And so even though you may have a person that has a higher income, them moving into this community is going to be good for the community. So that may open up an opportunity for that borrower to get benefits, okay, even though their income might exceed the limit. Does that make sense? Okay.
So would most down payment assistance programs have to be in a certain neighborhood?
No, I would say not necessarily, but you want to ask those questions. Now, the program that we love and we have talked about is the Indiana Housing and Community Development Authority program, which I absolutely love. And one of the reasons I love it is because it is broad when it comes to who does it serve. Actually, for a household of 1 or 2, I think the income is around $94,000 for Marion County and most contiguous counties. For a household of 3 or more folks, then it's $108,000.
Oh, that is generous compared to what used to be.
Yes, and if you're in the low income census tracts, because those are called targeted areas, you might see this sometimes on some descriptions. So if you're buying in a low income census tract, then the income limits are even higher. I think maybe 130, 140.
I think I remember us having that situation once before.
We had that situation.
Yeah, we thought they qualified for down payment assistance, and we were happy. I wrote this offer, went above sales price and what have you, and end up making too much money. And you, with your infinite wisdom, it was the census tract.
It was the census tract.
Yeah, that was just, and I never would have remembered that. No, but that's not my job. That's why you show us the money.
And
that's
one of the things to
know
know too with those low-income census tracts, because they're everywhere, in a lot of places, they're in areas that are low-income that are being revitalized. Like the sales price, the maximum sales price in those areas with the Indiana Housing Program, I think it's around 400.
This one was 300 and something.
Yeah. So it's designed. What I love about it, it's like these borrowers are moving into communities and areas, and they're taking a chance because they're not at this point reaping the benefit of a fully revitalized neighborhood. Now, sometimes, and people who've been around Indianapolis for a while, we've had communities that started down that path of being revitalized and they became stagnant. They didn't make the whole flip, right? So that person has some skin, they're taking a risk also. So what I love about it is the state is saying, hey, this is a good thing when a higher income family moves into this type of community because it's investing in this community
and offers stability.
Everybody benefits. So even if you've been living there, like my mom, she lived in our family home for over 50 years, those homeowners are going to benefit also. So it's a really good thing. So again, over 400,000 if you're in a targeted area generally, and you'd be surprised where the targeted areas are. People want to think they know, you don't know.
Right.
You have to look them up because they're not all necessarily in inner city at all. The other is if you're not in a targeted area, still the sales price is $331,000. So again, the state's program runs the full gambit, and again,
keeping up, it sounds like.
it's keeping up and it's helping everybody. I oftentimes heard middle income people say, you know, we're making this kind of money, but we have expenses too, and we're not getting any help, and that program does help.
I love that the purchase price is up to $331,000. That's not necessarily a little house, you know, that's fantastic that it's not just in, you know, a certain area, it can
That's
be
right.
anywhere.
Anywhere.
Because Janis can sell you a house anywhere
Yes,
in
she can.
Indiana.
Yes.
And knowing that you have that much buying power, that's a great tool.
Yeah, and that's for the state of Indiana.
Yeah.
So regardless of who's hearing this message, if you're within the state of Indiana, the information I'm providing is for the state. Every state has a housing authority. So even if you have family members, it's a finance authority. It's not the housing authority.
Right.
Let me make that distinction because there is a housing authority, but this is the finance authority. So every state has a finance authority. So, you know, but the finance authority is the one, the state's finance authority is going to be the one that's going to design the programs that help first-time home buyers.
Yeah, that happened for my niece. They live in Pennsylvania.
Yeah.
And we were having a conversation. She was just asking me, and I just knew, you know, that every state has that, and
Yes.
that's how she got into her home. Real quick question also that I have: what about paying the loan back, the down payment assistance back?
Okay.
You know, so. Obviously, you and I have been in the business for a while, so we've seen it, especially since we do work with IHCDA quite a bit. So some of them you paid back, then they stopped, you didn't have to pay back. But so what's happening right now?
Okay, so again, some down payment assistance is a grant, and typically with a grant, you do not pay that back. You may have a certain number of years that you need to live in the home to avoid paying it back, but the point is you don't pay it back. Then some you do pay back. Now with the state's program, what I love about it, essentially the way I explain that program is that you're getting 100% financing. Because, and what they're absolutely doing is the lender, so that would be me, we're making the loan for the majority of the purchase price. The state is lending the money for the down payment and most of the closing costs. So by the time you get done, you might have $2,000 to $3,000 invested total out of pocket. Many people walk away with some of that back in their pocket.
Exactly. So real quick, when you were talking about that, does this particular program for down payment assistance, do they require that you have a certain amount invested?
No.
Okay.
So you do not have to have a personal investment. A good question, Janis.
Thank you.
Some down payment assistance programs want you to have what they call skin in the game.
Right.
But this program does not require that you have a certain amount invested. So the way I explain the program is the state is lending you the money not only for your down payment, but for most of your closing costs as well. And this is the deal. It's a loan. It has no payments and it has no interest. So no payments, no interest. You can sell the house anytime you want to. You can close today and sell tomorrow if you want to. If you do that within 9 years of closing on the home, if you do that within 9 years, you do pay the fund back. And you pay the fund back to keep the fund going.
Replenishing.
You guys, people
Absolutely.
can't give money away and the program stay around. That's why I just got an email today from one of my colleagues that says, hey, we've got some type of funding for down payment assistance. The money goes fast, so get your applications in. It's a first come, first served basis. Those programs, very good programs, but they're going to be limited in terms of their duration and who they can serve because you can't give away money and keep it going. So the way this pool is set up, which I think is brilliant, because we've lived through, Janis and I have lived through all of it with Indiana Housing, but the way this program is set up is the money, if you do pay back, the money goes back into the pool for somebody else.
Yes.
And this is what sustains the program long term.
Can even be for their children, or your grandchildren.
Absolutely.
That's the way to look at it.
Absolutely.
But it's still 100% financing.
It's 100%. And the thing about it is ownership is what you want. This is your wealth building machine and you want to get started doing it. And so now, if you happen to live in the house 9 years, it's forgiven. It gets no better than that. But is anyone requiring you to live in the house 9 years? No. And that's why I don't even mention the 9 years about being forgiven until much later on in the process, if ever, because I don't want anyone to think they have to live in the house.
Right.
When you start telling people you have to do something, it just makes them feel like they're not in control of the pieces.
Restricted.
Yeah, restricted. But and this is the other thing I say to folks, okay, the down payment assistance coming from the state is 6% of the sales price. So we're gonna keep this pretty simple, and we're gonna say we're buying a $300,000 house, and 6% is $18,000, okay? $18,000 is more than enough money to cover your down payment as well as to cover your closing costs. More than enough. Typically in that price range, you may even be getting your earnest money back in closing. But my point is, so that's 6%. The average appreciation rate is somewhere between 3 to 5%, right? Which in theory means if you live in your house 2 years, you've recaptured an appreciation that money that it takes to pay back that
Good point.
that 6% should you be selling your house. So once again, it's really not cost you anything. And what it has done is put you in position to be a homeowner and start appreciating value of your home. That outweighs and should outweigh any concern you have about paying back. And the only other thing I'll mention is the Finance Authority's program typically gives you more money than any other program that I'm aware of.
Yes. Yes.
Okay, so aside from that, you just can't beat it. We love it.
I don't know how many years ago that was when the government gave $8,000. Remember that? So 6%, 8,000. I think I'll take that 6%. Any time.
Yes,
anytime.
absolutely.
You mentioned something about the most, like when you're utilizing Oak Grant, that it's typically $2,000 to $3,000 out of your pocket maximum. And this was a point that Janis made recently when someone was looking to rent. They weren't really sure rent or buy, and she's like, well, if you're putting your first month's rent, deposit, and last month's rent at $1,500, that's $4,500. When if you buy the home, you're coming out max $2,000 to $3,000.
That's right.
That was an excellent point. Very, 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 very good point.
Yes.
Mainly because of the fact that was excellent, because that's exactly the way you have to look at it. Because most renters, landlords, that's what they're requiring. And here you are, can qualify for down payment assistance. So, how about that?
I love that. It's
You're
perfect,
right.
Shelley. And it applies, the same concept applies to, rent to buy, okay, and buying on contract, both of which are very risky to do. Not necessarily bad, but risky. Sure. So when it comes to out-of-pocket money, the state's program and the bank, a lot of lenders, this down payment assistance is really, really, really helping buyers avoid those rental traps or even those home buying traps, and having a lot less money on the line. So yes.
Well, free money is lovely. So we'll take free money.
Another thing about down payment assistance, I just want to comment real quickly, is on determining whose income gets counted.
Oh, that's a good
okay. Because some programs, they're looking at the household income.
No matter what.
No matter what. So you might be the only one on the loan, but your spouse income is going to be counted also if they live in the house. Okay. If you have an adult child that's in the house, their income can be counted. It used to be if you had a college age child that was in the house going to school, working part-time, some of their income was counted, right, Janis? So when we're talking about these income limits, what goes along with that is whose income is getting counted. Because once you count everyone's income, it may put you over the limit. So again, that's why sometimes it's really complicated when buyers are trying to understand, why don't I qualify? Okay, they're looking at their income. The lender might be looking at the household income, and then the income the lender's also looking at could be income that you're not even counting, that they are counting. Sometimes child support gets counted in the lender's pot, but maybe you don't really want to count it, but special programs may count all income, right?
Well, since you do so much with IHCDA, do they have one that it includes the whole household, or is it really borrower specific?
Just borrower.
That's great
IHCDA
news.
has evolved. We love IHCDA because we've been in the valley.
Yeah, not in the weeds. We're in the valley.
We were stuck in the valley. And what I love about them, if they've listened and heard what was stopping people from using their program. And so when you have low MOB borrowers, number one, you also want to be honest. So today I'm working 2 jobs and tomorrow I'm only working 1 job, right? And so, you can't, if a person says, okay, so, tell me about your income, and you say, hey, I'm working here and I'm working there, and and then that goes in the pot, right? And then maybe you lose your job and you say, hey, I'm no longer working there. you too much movement, right? But that makes lenders nervous too, right? Because it may give the impression you're trying to manipulate your way into qualifying, when in fact it's just the nature of the beast. So what IHCDA has done is it's like we require whatever HUD requires for FHA loans, we require whatever Fannie and Freddie require for conventional loans.
Okay.
They don't add any more to it.
Okay.
Yep.
Okay.
That's a big difference.
Yes.
So can down payment assistance be used on like a double or 2 unit, or what would be the maximum?
Good question. Actually, I think when we first started out with First Place, it might have been able to be used on 2 units, but no longer.
Okay.
So that's a very good question. Again, that's going to be, I think it's going to be specific to the down payment assistance that you're using. Now, for you who might think why does it matter? Down payment assistance is intended to help a person become a homeowner.
Right. So
being a landlord
that would be
is a profit-driven activity.
Makes sense.
And it's the same if you buy a house. I know with the Indiana housing, if you buy a home that's on 2 lots, right? It's not on. Say you buy a home, it's got an adjoining lot, okay? And that adjoining lot can be basically, it's not part of the value of the property. It actually can be, surveyed independently and sold. Right. That's a problem for IHCDA. So in those situations, you may have to have all that done prior to closing, right?
Okay.
So just a little, they're really trying to, again, make sure this money gets to the right folks.
Well, I know you really, like, your focus is on down payment assistance today, and you mentioned, we've talked about first-time home buyers, but with IHCDA, because you guys are, like, your clients stay with you for years, and then the generation after, and the generation after that. What about next home?
Well, I think in the few seconds that we have left, I'm going to quickly talk about Next Home. Next Home is down payment assistance also from the state, and it is for we can be used by a first-time home buyer, but it's also for non-first-time home buyers.
Fantastic.
The down payment assistance amount is not as much, okay? But if you are a first-time home buyer, and there are reasons, we can't talk about it today, we'll talk about it on another show. If you do happen to use Next Home, you can, as a first-time home buyer, then you can also get the MCC credit. And the MCC credit, bottom line, guys, another show, but it can it can save you $15,000, $20,000.
That's amazing.
That's
over
definitely
time.
another show.
Absolutely. So
that's a lot of information.
It's a lot of information.
We certainly appreciate your joining us today. And Diana, I just can't wait till all the people come for down payment assistance.
Absolutely.
Please, the number's below, so please give us a call, and we'll see you next time.
Bye-bye.